So let me show you some big comments Alex Karp said on the conference call that are substantial, and then we'll go through my valuation models and how much things have changed and talk about where the stock price is going from here. So these are some of the 7 biggest things, at least in my opinion, Alex Karp said on the conference call. He started out the conference call just being funny. He said, well, given how strong our results are, I feel like we should just go home. So that was a little ridiculous and funny at the same time, like respect, okay? Second thing he said I thought was substantial, and he has hinted at this for about a year now. He's been hinting at this, but I thought he came across the most direct I've ever seen him. And he basically just flat out said LLMs are the commodity. He says everybody's trying to assign this huge value to LLMs, and they think like LLMs is where the real value is here. And he basically just flat out said LLMs are a commodity. What we do is the special part. But LLMs are just going to be a dime a dozen over time. And I've got to say, as somebody that pays attention to what all the big tech companies are doing and then the VC-related companies, to me it does look like LLMs long-term will just kind of be commoditized. It really does look like that. It looks like there's going to be special work done on other companies when it comes to AI, but I think LLMs, large language models, are a little bit more of like a distraction in regards to the whole thing and thinking about like that's where all the value is. It doesn't actually look like that, right? He says, and this is, I kind of simplified some of this stuff because you know Alex Karp, he can go on like a 20-minute tangent. He wasn't that long, but he can, get asked one question. He's talking, philosophy for 5 minutes, right? So I simplified some of this guy for you guys, okay? But basically the gist of it, he said the data processing is where the magic is. Cutting decisions down to 1 hour that these decisions might used to take 5 hours or 50 hours or things like that, right? Or taking a massive amount of people to try to figure this out. Now, using some product like Foundry from Palantir, these decisions can be cut down immensely. And that is whether you're on the battlefield or whether you're in the boardroom, right? Another simplified thing here that I simplified for you guys is basically, he said, the focus is on the product, not the sales staff. He says, we don't want to be a commodity product that everyone is forced to use and hates, which is something that definitely, there's a lot of companies that come to mind when you think about companies that people really don't like it. I even heard about, I've studied all the big tech companies, and I've heard like even Oracle's product, like a lot of people don't like that product, but basically you have to use it, right? I've heard that about a lot of Microsoft's products over time, that a lot of people don't like Microsoft's products, but you got to use it. And he's basically saying we're not just going to be a commodity product like all these other folks do, and they tie you in. People are actually going to want to use our products and love to use our products, right? Also simplify this, but basically the gist of it, he said, we're focused on margins and high growth, not just high growth like many companies in our position, because basically there's some pushback here with Palantir about, okay, revenue growth is at 30%. There's such a crazy demand for AIP. Why not just spend crazy money on marketing and sales? Go hire, go spend an additional $50 million a quarter on sales staff, right? $50 million a quarter is going to get you a lot of salespeople, and Palantir could do that, right? Why not spend another $50 million a quarter or $20 million a quarter or whatever on marketing and run ads on football games and all these sorts of things, right? And basically, he said that we don't need to do that. Our product's special enough. We really focus on our product, and we're focused on not just growing to grow. We're focused on at the end of the day having great margins as well, right? Which is a good thing, I think, certainly, and that's just a prudent action, especially if you ever get into any struggling economy or something like that, right? Now, also simplified this, but he basically said word of mouth is a huge sales force for Palantir. I've talked about this point many times before in regards to Palantir. If you're an executive of a company and you bring in Palantir, for your company, and you think it's a game-changing product and it, helps your business save a bunch of money, and then you go get a job at another company, being an executive of a different role, and that company doesn't have Palantir, you're going to say, hey, we need to bring Palantir because it's going to be able to help us for XYZ reason. So as Palantir scales and gets bigger and bigger and more customers, it's going to be a lot of word of mouth that spreads. That Palantir's, if Palantir's got the real deal Holyfield product, right? The word of mouth spreads from this company, that company, this company, and people talk at conferences and all these sorts of things, and executives are always changing positions, and sales staff all these folks are always changing from this company to this company, right? It's rare when somebody works at the same company for 30, 40 years. Nowadays, people are in and out of jobs 2 to 5 years, right? So this person says, hey, we at Palantir, my old company, helped us save $80 million a year because of XYZ reason. I bet you it could save us a bunch of money. Let's bring in Palantir. Let's see what they could do for us, right? Next thing you know, there's a boot camp that happens. Next thing you know, that company's signing a foundry deal, right? So word of mouth is huge, and that's honestly always the best sales for you as a business owner, right, is always word of mouth. It's always the most magical thing, right? Because that comes from like a trusted source rather than just seeing an ad on TV or an ad online or something like that, right? And he also said we're in it together with your retail investors, and obviously Palantir's got a huge retail community around it, so it's good to see that as well. Now, let me show you valuation model here and how substantially this changes Palantir's future now that we're talking about different sorts of growth rates, okay? Check this out. So, if we go back a year ago or so, everybody was kind of thinking Palantir was a 20% revenue growth story moving forward, right? And that was just a year ago. Like, a lot of people were convinced, like, Palantir, yeah, they're growing, but it's just probably going to be like a 20% growth number, right? So if you run, now keep in mind, everybody's expecting the net income to grow at a way faster clip than revenue grows, which is 100% what should happen, right? So if you were running your numbers at, let's say, a 20% revenue growth number, right? And then you were saying net income could grow at a 30% clip, right? Which puts the company at net income margins of 30% in 2028, which isn't crazy. Like, Palantir should be 30 to 35% net income margins come 2028, right? So that would put the company's revenue a little under $6 billion in 2028 and the net income around $1.7 billion. So if you've got a more SaaS-related company, which people, once again, put Palantir into a SaaS category, having 20% top-line growth, 30% bottom-line growth, you're going to command somewhere around a 50 to a 70 PE ratio, right? Because your growth rates are far outstripping an average stock in the market. I mean, we're talking about growth rates that are 3x or 4x in average stock in the market, so which means you're going to command likely a 3x or 4x valuation, never mind the SaaS component in your business, which gives you even a bigger, a higher multiple, right? So if there was a situation to play out here, I mean, let me just call it how it is. Like, Palantir would be a dead money stock for years. You wouldn't be able to make any money in regards to this one. You would have to wait till past 2028 to make any substantial money from here, right? If that was the growth rates we're talking about. But now we're not talking about those sorts of growth rates. Now we're talking about 30% growth rates, right? So now this changes everything for Palantir and how you think about the return profile moving forward for Palantir. So now if we're talking about 30% revenue growth on average from 2025 to 2028, we still, once again, we don't know where the top is. If you exclude the SPAC situation, Palantir grew revenue at 32% clip last quarter, right? Or if you want to even not take that, they grew at 30%, right? The previous quarter, they grew at 27%. The previous quarter before that, I think they grew at, I want to say 25%, and then it went down and down from there, right? So they've been growing. We don't know where the top is. Maybe the top for revenue growth is 33% year over year. Maybe it's 35%. Maybe it's 37%. Maybe it's 40%. We don't know as of right now. All we know is it's likely higher than 30%. So when I ran my 2025 to 2028 projections here, I'm just saying, like, hey, 30%. Let's just run it at 30%, right? So if you run it at 30%, then net income growth should be around 45%, right? Which puts net income margins of this company around 33%. Because remember, they're going to far outgrow their revenue in regards to net income percentage. It's not even going to be close, right? So if you're talking about a 30% top line grower and a 45% on average bottom line grower in the SaaS space, you're going to come in somewhere around a 75 to a 95 PE ratio, and that's probably being conservative. You're probably going to be in over 100. If you're growing top line 30% and bottom line 45% in your SaaS, you're probably 100 PE or more. But let's go a little more conservative, 75 to 95, right? That puts the stock somewhere around $90 to $114 come 2028, which gives you a compound annual growth rate on the low end of 21% and a compound annual growth rate on the high end of 29%. And that's from here where the stock is at, not where the stock was 2 years ago or 3 years ago or today. Today or a year ago or something like that. That's today, right? So there's massive compound annual growth still coming in the stock over the next 4 years if we're talking about these sorts of growth rates. Now, additionally, we don't know where the top is for Palantir's growth rates. If they get to like a 40% growth rate, then you have to throw this model out and you have to run completely new projections. Because then if you run a 40% number, let's say they get up to that number and they can do that for a few years in a row, right? Let's say this 4 year span, then you're talking about net income growth will probably be around a 60% number, maybe 65%. And then if you're talking about a 40% grower on top line and 60% plus on the bottom line per year, then you're talking about a PE of like 150 you're going to slap on the stock. 125, and then your compound annual growth rate's at a whole different stratosphere, right? So this is why everything is really changing in regards to Palantir massively, because the growth rates have changed massively. So when people say, well, it's the same company and the stock price is so much more expensive, well, if you're going to value this company, there's a big difference between valuing this company at a 12% growth rate versus a 20% growth rate versus a 30% growth rate versus potentially a much above 30% growth rate, right? This is something to keep in mind here. And they've been putting up these numbers in an election year where a lot of companies are kind of like, scared to make moves. They don't know what the next administration is going to do. What happens if we get a little more clarity? What happens if the businesses are feeling a little better about themselves? What are Palantir's numbers in that environment? And what happens when the international business picks up? Tell me what growth rates are at then. That's why Palantir has changed forever. Now, here's an open question for everybody, and I'll tell you what my opinion is as well. Palantir is going to likely start having cash flow pouring in of $1 to $3 billion per year over the next many years, right? What do you do with all that money? There's really 5 options, in my opinion, on what Palantir could do with all that money. Because like I said, $1 to $3 billion a year in cash flow is just going to be pouring into this company. And the cash stacks are going to get fatter and fatter for this company. So there's really 5 options, in my opinion. One is they could buy other softwares. Maybe smaller softwares that haven't really taken off yet. And they can sell that as some sort of software suite. Maybe attract certain clientele bases. Maybe they're having some trouble attracting, right? Get through the door and then sell Foundry, and it's kind of a Trojan horse situation. Like, that's potential. They could do that, right? They could buy back a ton of stock, which is always a potential. Now, ideally, the best time to buy back a stock is when your stock's price has been hit heavily, not when you're at all-time highs, right? So to buy back stock might not be the best thing to do necessarily in the short term. It might be, someday when people freak out over Palantir's growth rates, whether that's 6 months from now or 6 years from now or a year from now or whenever that is, people eventually, they'll flip out and they'll be like, and that's probably when you go do that big buyback. Like PayPal, for instance, is a great example of a company that's got a massive buyback right now, and they're buying back billions of dollars worth of stock every year, and they're just taking crazy amounts of shares off, right? Palantir could do that. I don't know if it's the best decision to do when your stock's at all-time highs, right? Third thing they could do is pay a dividend, a potential. I don't think that's the best use of capital for Palantir, in my opinion. It's too strong of a growth company. Someday, Palantir might be a boring 10 or 15% grower a year. When that day comes, Palantir can focus on paying dividends, because it'll be more of an ATM play, it'll be more of a cash flow play, and it'll be like, we don't have the growth rates we used to have back in the day, the 30% or more than 30%, but you know what, now we're just a straight dividend payer and a buyback company. So those are probably plays down the road, in my opinion, in terms of buybacks and paying dividends. The fourth thing you could do is you could continue to add, to your R&D payroll, which I think they should continue to add to their R&D payroll. At the end of the day, Palantir's got one of the best workforces out there of any tech company. Why not continue to spend? Continue to come out with game-changing products and services. Like, people imagine Palantir as this company with, Gotham and Foundry and AIP and the products they have in the market, and they think like that's going to be what Palantir has forever. No. There's products and services. Palantir is going to be coming out a year from now, 2 years from now, 3 years from now, 5 years from now, that we haven't seen yet as just shareholders of the company, that will be coming out, that will probably be game-changing products for Palantir. That's going to open up whole new market segments for the company and whole new sales opportunities. So they can continue to, in my opinion, take a good amount of that cash flow, pour that into the employee force, and continue to build game-changing products and services that open your abilities up to continue to grow at a 30% plus clip, if not above that, right? And additionally, they can continue to pour some money into sales and marketing, which I think they should do as well. Why not? Don't go too crazy with it. Keep an eye on margins like the company wants to do. But with this sort of revenue growth, there's no question they have wiggle room to up R&D and up sales and marketing quite substantially over the next few years and continue to build this beast where they could be a sustainable 30% plus grower on that top line. I don't see any reason why they can't, if not achieve a 40 or 50% number, right? There's no top in regards to what Palantir could grow. That's the important thing you gotta understand. There's no top here. Like sometimes people think like this is a max, like, Palantir, when they start doing 20% growth, people are like, oh, that must be the max. They can't grow anything above that, right? Now it's 30%. People think, oh, they can't grow anything above 30%. Sure, they could. They could grow 35%. They could grow 40%. They could grow 50% potentially, right? So that's where I would focus about. I wouldn't really buy out other softwares unless there's just something magical out there that they could see integrating it. But I would just continue to pour good amounts of this money into R&D and sales and marketing. And then with the excess money, continue to buy up treasuries and continue to just make more and more money from treasuries year after year after year. Because you got to understand, even if the yield from treasuries come down a bit, right? Palantir could be in a situation where they could still make more money because they have way more money in treasuries than the previous year, right? Keep that in mind. So, and then you just have a fortress balance sheet, and then you also make people feel very comfortable holding your stock even in recessions. Someday we're going to get a big unemployment recession where unemployment's going to go 6, 8, 10, 12%, right? I don't know whether that's a year from now or 3 years from now or 5 years from now. In that sort of environment, people get worried about stocks, right? When you're in a company with no debt and has billions and billions and billions and billions and billions of dollars of cash sitting on the balance sheet, you're not scared. You're like, oh, this is great. Like, this is awesome, right? And then you're not even really scared of inflation either. Because you're like, oh, even if the Fed ever goes up on rates again, well, shoot, we're just going to make a bunch more money on treasuries. And we don't have debt, so we don't have to worry about rates going up, right? That's fine for us. No. Where's the stock price going from here? So, the stock price, $50 is on deck for Palantir now at this point in time. So what I think is the stock heads toward 50. And then I think, and when I say head toward 50 over this next bit of time. And then I think the stock's probably going to take a chill out period for 6 to 9 months. That does not mean the stock is going to crash or anything like that. It's just going to chill. And when I say chill, it's going to kind of be stuck in like a $45 to $55 range, and it's going to go up and it's going to go down. They're going to report quarters, and the numbers are going to be really good, but they're not going to be super exciting in terms of like making everybody flip their flapjacks. And so the stock will just kind of like flounder in that $45 to $55 range for, in my opinion, 6 to 9 months, and that will be that for a while. And then when we start getting closer to 2026, right? And if we start hearing about continued revenue acceleration and maybe heading toward a 40% number, then we have our next big move for Palantir, and that's when Palantir moves to a $70+ stock. Then at that point in time, and we start talking about the stock at a $70, $75 somewhere in there roughly, okay? So there's definitely a lot of room there. As far as me personally with my shares, I'm holding these tight like a little kid holding a teddy bear. And I have 0% interest in selling my shares. 0%. I have 5,555 shares on the public account. Zero, and I hold a bunch of shares in the Patreon portfolio as well. 0% interest in selling. Like, I'm not even like it. I don't care. Put Palantir at 46 tomorrow, 47. Put it at 50 tomorrow. I have no interest in selling the stock and trying to time it out. Even though I believe the stock will just kind of flounder for 6 to 9 months after that in the $45 to $55 range. I still have 0% interest in selling because I don't feel like dealing with the tax implications of that, right? And then dealing with like trying to time back in. No. None with a special company like Palantir that continues to like to the upside. Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We've got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with. Now, here's my view on Palantir, right? Obviously, I spoke super in depth about it on the main channel last night. So if you didn't get to check out that video on the main channel, check out that video. That's a 40-minute beast going all into Palantir and super in-depth thoughts, right? I just really want to focus this talk about kind of Palantir stock price, right? This is the first time in years that if anybody wanted to take some profits here, it's the first time that at least I could understand people taking profits. And that's a big statement because I could tell you I've not agreed with anybody really taking profits in this one when it hit $10, when it hit $15, when it hit $20, when it hit $25, when it hit $30, when it hit $40, when it hit $45. This is the first price level that You might still regret it long term, by the way, taking profits now, but at least I get it. Like if somebody says, you know what, I'm going to take some off the table here, respect. Like now this is a first price. Now that it's over $50, I'm like, okay, at least get it. Like, you know, respect. Take some profits. And I have not agreed with that the whole run. Am I taking any off the table here today? The answer to that is no. Not interested. I don't want to play the timing game. Although I think the stock, if you watched my video last night, I spoke extensively about not just the numbers, but the stock price. I think the stock price is now going to basically flounder between 45 and 55 for the next 6 to 9 months. The next 6 to 9 months, I think it's just going to flounder around. I don't want to try to time in and out of this one. And I really don't have any ambition to sell shares. I just don't have a reason. The company's executing too well. The numbers are too impressive. Alex Karp's doing a hell of a job. The product's too good. And so for me, I have no interest. I have no interest in kind of trying to play this timing game, even though I do believe the stock will just kind of flounder for a while now at this point in time. So that's my view on it. And at the end of the day, I already have new fresh money that I'm putting into a lot of the value stocks, a lot of the dividend stocks, things like that. I don't need to cash Palantir shares to have money to put into other places, right? And the other thing that is a little scary to me about taking profits in Palantir, and why I'm scared to take profits in Palantir, I got to be honest with you guys, we don't know where the top is with these growth rates. All we see is revenue acceleration quarter after quarter after quarter. I believe, correct me if I'm wrong, I believe we have now accelerated revenue percentage growth 6 quarters in a row. The earnings per share keeps coming in better and better than expectations are, right? So for me, it's very difficult to say I personally want to go cash Palantir shares today, even though I do believe the stock will flounder for the next 6 to 9 months and just to be range bound. It's still extremely hard for me to go cash any shares today when I'm like, I don't even know where the top is for revenue growth. Like we just hit a 30% number. Who's to say next quarter we don't hit 32 or 33%? And who's to say the next quarter after that we don't hit 35% or 37% year over year, right? So that to me is difficult. And that to me is why I can't say in the public account here today, I can't go ahead and cash that, any of those 5,555 shares. I just can't do it. And so I'm willing to hold this stock and have it do nothing for the next 6 to 9 months, right? I would rather that be the situation than go cash shares and then the revenue growth goes to 35% or 40%. And I look back and I'm like, what the hell was I doing? Because then the stock's trading $70, $75, right? So that's my view on this one. And that's where I'm at in regards to Palantir. And so this is a great moment as a Palantir shareholder, though, isn't it? Because we're at that moment now as a Palantir shareholder where at least you can have a conversation about, does it make sense to take some profits or not? And that's beautiful. We're not talking about taking losses. We're not talking about taking small profits. Most people that have been in the stock over the last 2 years, you've made either life-changing money or just ridiculous returns, right? For some people, this is life-changing money. For other folks like myself, this is just big money. We just made a lot of money in a fairly short amount of time. Remember, this is in a matter of 2 years, right? And I mean, look at the gains, $232,000 in gains, 473%. I mean, that's incredible, right? So, yeah, beautiful. Respect. If anybody wants to take profits, respect. If people are like myself and they're like, nah, I have no interest in taking profits. I don't care if the stock stagnates for 6, 12 months, whatever. I'm on this ride for the next, 3, 5, 7, 10 years. Respect as well, okay?